There we go. Great. So excellent. Sorry for the slight delay. I guess there was a WebEx update, so I had to kind of run through that. But if we're all here and you should be able to see the screen, again, as usual, we'll make today kind of half lesson and half live in the markets. Wonderful. Great to see everybody. So the topic today is one that's usually pretty important, well, it's always important, but pretty popular. People coming into trading, typically either the first strategy that they attempt to be successful with, or at some point try, are breakouts. Right? Everybody's big on breakout trading, and what's interesting is you don't see people being successful breakout trading. When I say successful, I mean consistent low risk profits year after year after year. Right? Why is that? Well, there's a few things, and we're going to get into that in a minute. What I want to do today is spend a few minutes making you helping you get present to that, but more importantly, show you a much better way to do it, and it ties all right into core strategy. So I want to take a look at let's start lesson based and look at some trades that I and the team have taken at Online Trading Academy over the past few days. And we'll look at some of the services that gave us these trades inside Online Trading Academy. And just so you know, anytime you see a statement like this on a screenshot, just make sure you understand these are all real trades. These are not hypothetical returns or demo accounts. Okay? So if you look at the chart, here's a trade that was taken. Don't worry about the supply zone being, too perfect or anything at this point. We'll talk about that later. But the reality is, prices are trading sideways here. All of a sudden, there's a strong drop in price. Now remember, for those that are new to these sessions, what the strategy that we always talk about and execute is, we're looking at real supply and demand in the markets. Exactly where banks are buying and where banks are selling, so that we can buy and sell there too. Okay. To do that, we need to be able to quantify real supply and demand in the markets, and then identify those levels where supply and demand are out of balance, because that's where prices always turn. Okay, so we'll incorporate that into today's talk. So what most people do, if you look at prices kind of basing sideways here, what most, especially new Forex traders will do, they'll wait for a breakout to the upside or a breakout to the downside. Okay? And if you look at this one, so now prices follow my arrow. Prices trade higher, and then they base sideways for 1, 2, 3, 4, 5, 6, 7, 8 candles. Then what happens? There's a breakout to the upside. What are a lot of retail traders doing here? They're buying, right? Okay. What happens on the very next candle? They get stopped out for a loss. Next, prices come down back in that base, and all of a sudden there's a breakout to the downside. What are most retail traders doing here? They're selling short on the breakout, because that's what most people do. And then what happens when price break comes back to the level? They stop out for a loss, right? So instead of getting caught up in that novice world of breakout trading, right, where you just don't see people being successful, because that's not real world trading. That's not at all how banks and institutions do it. Very different. Okay. What we want to do is, instead of shorting on this breakout, now what's the problem with shorting on this breakout to the downside? It actually looks kind of great, right? You just short right here, right at the beginning of the breakout, and make all this money on the way down. Well, the challenges are this. Number one, you only know it's a breakout after it happens, right? By the way, can everybody hear me? I don't see anybody typing in the chat, so just want to make sure you're still with me. Okay, good. So either you're really paying attention or I'm really boring you, but I'm going to hope it's the other one. All right. So, yeah, I know this is really exciting stuff. No, I'm kidding. I'll try to make it a little exciting. So again, but the problem is problem is, with the breakout, you only know it's a breakout after it happens. Okay? So when exactly do you sell short? Well, it's not going to be at the beginning because you don't have a breakout yet. Right? So, maybe down here somewhere you get short, and if you do that, where do you place your protective stop? Because the only place that a protective stop is really going to be safe is on the other side of a set of orders from sell orders from banks, right? Above where banks are selling, right? But you're selling, you're selling on a breakout so late here. So what happens on breakout trade? What happens with breakout trading is your reward is always lower, your risk is always higher, and the probability of the trade working is significantly less than what we're talking about with core strategy. Okay. Zoab, yeah. If you're talking about this is not a demand level to us. This is not a demand zone. Remember, it wouldn't qualify based on odds and answers. So instead of shorting this breakout, which also, you've got to be there, you've got to be quick, you've got to be pushing buttons. Okay. So, some people might find that stressful, emotional. A lot of energy needs to be going into that. You don't need to do any of that stuff. An alternative is just forget about all that. Let the breakout happen, and instead of trying to enter here, okay, so when we're talking about the core strategy, supply and demand, we're not trying to make money when prices drop here. And we're not trying to predict this decline in price. Though we can on some occasions, and I'll point that out in a bit. We're not trying to do either of those two things here, though. Instead, we let it happen. Once prices break down from this level, that gives us all the information we need about the level. It tells us, objectively, supply exceeds demand. So, if and when prices rally back up to this level, we can now sell short here for two reasons. One, because banks are also selling here, and two, because we know we're selling to a retail trader. We know we're selling to a retail buyer, right? Someone who's buying after a rally in price, and they're paying retail prices. Okay? And again, to the breakout trader who sold short, after this breakout started, obviously, where do they typically put their stop? Their stop is usually, their buy stop is up here where we're selling. Our entry point, okay, is the breakout trader's stop, buy stop. Does that make sense? Here's another one, but let's go to this one. I think this one's a little clearer. So I'm just going day by day. So these are all just income trades that we take. Here's the second. That one was, I believe, that same day. Here's the third. Just short-term income trades. So again, prices are basing sideways. All of a sudden, there's a breakout to the downside. Again, breakout traders who sell short on this breakout, again, where is your entry point? I don't have an answer, and most people won't. So, but you only know it's a breakout after it happens. So you're probably selling short right down here where I'm pointing, or somewhere down here. And again, the breakout trader is going to place their stop right above in the area here, which is where we're selling short. Okay. And again, if you're in the XLT or the Mastermind Community Online Trading Academy, a good part of our strategy is we want to buy sell stops and sell buy stops in the appropriate area. Again, the goal is just to think, act, and trade just like a bank, period. We're not trying to add any special bells and whistles. So again, instead of attempting to short this breakout to the downside, which again, you're selling after a decline in price. And remember, with breakout trading, you're buying when prices are going up and you're selling when prices are going down. That's very, very tough to do. Okay. So yeah, Boyke, the retest of the level right here. That's when we want to be selling short. Okay. So you're going to be selling short. Typically, one of the people you're going to be selling to is the person that's shorted the breakout. you're going to be filling their buy stop. All right. But again, you can choose to short the breakout, or you could choose to let it happen and take that information, that golden information, for what it really is. Okay? All right. So we know supply exceeds demand when prices fall away. So we want to sell short at this level. So instead of, again, the whole concept is, instead of shorting the breakout to the downside, get in on the retest. Which again, is just simple core strategy, right? Again, like we said last time, remember the lesson. It all comes down to fresh levels, significant profit zones. Yeah, and Ruben, good point. It's all about finding the orders. That's our really our only focus. The orders, where banks are buying and selling. That's the strategy. And Ruben, obviously, you've got a pretty good eye for that, which is great. Here's another trade from that same day. Now, again, this one's probably more obvious for the breakout trader. So notice how prices are basing sideways here. All this basing is going to get people's attention. It's going to attract people. The more time price spends just going sideways, and this is the S&P here. So this is the biggest equity index market in the world, right? The more time price spends basing sideways, the more people around the world who look at this market are going to say, wow, the S&P is really trading sideways for a while. Probably going to break out, it's obviously going to break out to the upside or downside. That's going to get a lot of people interested in watching this market. And yeah, so exactly. So look at how prices fell away from the market. Eventually, prices shot down to, really collapsed initially. One strong candle. So part of that are breakout traders. Some people put a line right here at the bottom of this base and put a sell stop for an entry right below it. They want to get in and catch this thing as it starts to fall on a breakout. Again, the problem with that is they're going to put their stop just above that area where they sold short, which again is where we want to be entering. We don't want to sell when prices are falling. We want to sell when prices are high at retail prices where banks are selling. Does that make sense? All right. Yeah, so here's the other side of it. I see one of the comments above. So yeah, breakout trading is a part of the whole school of thought, conventional technical analysis. But as traders, do you want people, should everybody stop taking breakout trades? Do you want people to stop entering on breakouts? I mean, is this do we want that to happen? No, right? Of course not. Okay. So, no, you want everybody taking the breakouts. Again, I know it's not nice to talk like that, but that's how the game works. The goal is to just understand how the game works, and then you can be successful with it. So instead of shorting this breakout, we want to sell the rally into the supply zone. The other thing that this initial breakout does for us to the downside is it opens up and tells us what at least our initial kind of easy profit target or easy profit zone is. Our very predictable profit target. Now we want a bigger profit target than what I'm telling you here, but I'll show you in a minute. So the fact that prices are able to come all the way down to this pivot low here tells us that now all the significant demand at this price or higher is filled. So that when we sell short at the supply zone, we expect prices to come down to at least this pivot low, because there's really nothing to stop it, right? Does everybody understand that? It's a very, very, very important point. Okay. Let's look at another one. Let's look at the very next day. Again, very little trading here. Big, strong breakout. Again, you can look at this and say, wow, you'd have made a ton of money shorting this breakout. Once in a while, maybe. But again, even with that, where's your entry point? Where's your stop? And did you get taken out on the pullback? Again, you could sell short on the rally back up into that level. Last one here, and then we can let's dive into the live markets. Okay. And remember too, you're never going to get the beauty of trading is that you've got so many strategies and so many different tools and bells and whistles out there. We want that, right? Okay. So, you know, you're going to have differences of opinion out there. What I try to do is not throw my opinion in this at all and just go back to just basic core supply and demand, because that's really all this is. And again, my big advantage is I started on the bank side of the business. So again, if you have a price level where demand exceeds supply, price is going to rally from that level. If you have a price level where supply exceeds demand, once the last buy order is filled, price is going to fall. If you believe that, then that's core strategy, right? Everything just builds off of that. So that's where the strategy comes from. Last one here, and then we'll go to the live markets. Take a look at this gold trade on the right. Look at how fast prices break down from this level. So if you're a breakout trader, if you're a breakout trader, you know, it's going to be tough to get even remotely a decent price if you're shorting while prices are falling this fast. Same thing over here on the left in the NASDAQ. Okay, Boy KC, good question. How do you know, how are you sure there's still orders at that level? Well, again, whoever was selling gold here, we know that they didn't fill all their orders because prices only traded here for a short period of time and then fell away. Another way to say that, to help understand it, is if let's say the opposite. If supply and demand were in balance here, if there was equilibrium here, wouldn't prices just keep trading sideways? They would, but they couldn't. Why? Because there's much more supply than demand here. Whoever was selling here was not able to fill all those orders, right? And probably very few of those orders. And actually, once we entered over here, you know, after we entered and that trade worked out, we see, you know what? They really had a lot of orders left. So we were right in our assumption, but even after that, you know, if prices came back up to this level, do it again, okay? The lack of penetration into this level, I'm glad we got filled, but the lack of penetration in this level tells us there's still probably a lot of orders there. Yeah, so Boris, one of my big fears with doing webinars is, you know, to do people, this just sounds, you know, super simple and all that. Make sure if you're new to this, you go back and watch some of the prior webinars and some of the basic ones, so you can get all the rules. I'm speaking today from the perspective that because I know there's a lot of people in here that have been with us for a while. So make sure you go back and watch some of the basic webinars so you can kind of get the core strategy rules and then some of the odds enhancers, right? Yeah, all we're doing is identifying wholesale prices and retail prices, demand and supply, and then just buying it wholesale, selling it retail, just like a bank does. Yeah, obviously the key is learning how to identify these levels. Before I forget, there's my email address if you have any questions beyond beyond any of that stuff. Okay. All right. So I think that's it on these. Why don't we go to the live markets? Let's do that. Great one. So in the last few minutes, while we've been talking here, prices come back up to a supply zone in the DAX. Right. So now, just so you can see, so very early in the morning, here's our supply-demand grid. So this is for our mastermind community members. So this came out very early this morning. Here's a supply zone we gave our mastermind members for the DAX. So we gave them our first supply zone here was 96.93 to 9,700. Okay. And then if we go to the market, that was this level here. So well after we put that level in and the market got going, prices rallied up to that level. It worked out well for our members. But let's go back over here. So prices are trading sideways. Again, look at how strong the move is away from our level. It's going to be very tough to enter that on a breakout and get a good price. By the time you even see that it becomes a breakout, you're probably entering halfway down, and then there's a good chance you're getting stopped out on these rallies, on these pullbacks. So all I'm suggesting is you might want to try not doing that, and instead let this big decline in price happen, and then enter a position when prices, this is our entry point up here, when prices rally back to the level. Okay. With your buy stop above and your target just below. In this case, your target's probably going to be right here before, you've got a little bit of demand here, so before that, but. So again, you could have entered on the breakout. I'm suggesting you might not want to do that and enter on the retest. Okay. Go ahead. Demand at 96.60, are you asking? No, this would not be a demand level. This would not qualify for demand. All right, let's move on. So I can go to really any market you want to go to. I've got a list here, but I can go to really any market. Why don't we look at, why don't we scroll over to Forex? We've been looking at a lot of NASDAQ, a lot of S&P. But since the market's been, let's see here. Yeah, GBP, let's look at the pound. Let's get the pound dollar. So let's start with the larger time frame. Okay, here's the pound dollar. So obviously this market's been falling pretty fast. We had a gap down after this decline in price, so you're almost always going to get a little bit of a rally, and obviously into this. But if we go down to smaller time frames, this is a great example. So you could have just bought this breakout here, right? Or you have two choices. You can buy the breakout, or what could you do? You could use the core strategy I talk about and buy the retest. You have to be careful. You're probably going to have some supply just up here, but that's quite a bit higher, right? So again, it's the same concept. You can buy the breakout or buy the retest. So the retest is actually, let's go down a couple time frames and see, we can maybe refine that. Maybe we have a trade coming up here. Yeah, I'd like to go a little bit deeper in the zone. Yeah, so maybe 62.05. Right now you're at 62.20. Yeah. So I just want to say one more thing. It's kind of stating the obvious, but it's so important. And believe it or not, you'll see a lot of people don't realize it. when you buy anything in the market, any Forex market, when you buy into any market, right? Forex, futures, whatever, it doesn't matter. Any market you can possibly buy into, what's the only way you're going to make money? There's only one way you're going to make money when you buy something. What has to happen for you to make money? Someone needs to buy it higher than you. Someone needs to pay higher prices than you. Right? When you buy something, someone needs to pay higher prices than you did. Right, obviously, right? But think about it. So you need a strategy. So now you need to figure out, okay, where do most people buy into markets? What's the strategy that most people use, and where is that entry point into a market? So answer me. I mean, what is that? When people buy into a market, what do most people do? What do most traders do? Yeah, breakouts, right? They buy breakouts. Okay. Now, where can you fit? Now, so now you say, okay, the most popular strategy out there is breakouts. Now what I would do is I'd say, all right, so where exactly do they push the buy button? Well, I'd go buy a couple trading books or get some information on the internet. What's the entry point for the breakout entry, right? Once you figure that out, what's the next thing you should do once you figure that out? What's the next thing you should do? Figure out a strategy that has you buying before that group. Does that make sense? If you know where everybody else is going to buy, great. Now just figure out a strategy that gets you in a little before them. Okay. Now, some people would call that front running, but that's the only way you make money, right? There's legalized front running and there's illegal front running. Illegal front running is you're a professional, or I guess maybe even not I don't know. You're a professional or have some kind of connection to a bank or to a company in stocks, and someone tells you this is going to happen, and you buy a big chunk first. You can go to jail for that, right? The other way to do it is have a strategy that quantifies supply and demand, right? Where you won't need to utilize any insider information, which we don't want to anyway, and just get in before everybody else does. Again, I don't want to oversimplify it, but people forget that basic governing dynamic that has to be there. When you buy, other people have to buy after you at higher prices for you to make money. If your strategy does not accomplish that goal, good luck. Okay. Make sure your strategy has other people buying after you at higher prices. All right. Next market, where do you want to go? Doesn't matter to me. Aussie dollar, let's go there. All right, Andy. Okay. Sure, we can go to gold next. So we are on the Aussie dollar, which just it just started to move the last few days. So let's take a look. Why don't we go to a kind of a smaller time frame here and try to find an opportunity? So let's do this. Okay. Prices are trading sideways here. Got this base. We don't have a supply or demand level yet, but prices are trading sideways, right? Right, Walker. This is not a breakout. We're just trading sideways. So what we can do is we can try to buy a breakout to the upside, short a breakout to the downside, or we can just let whatever's going to happen happen. So I could say, if this level is, let's see, call it 9111, 9106, right? Okay. So 5 points. We've got a 5-point level. So 5-point level, it's not even a level yet, it's just a 5-point range. So if I want, so watch this. I'm going to put a line right here. Let's make this a, I don't know, just choose that color. So if the range is 5 points, and I want to require this to go twice that, I'm going to put a line 10 ticks higher, 10 pips higher at 21. Okay. And then 10 lower. So I'm just going to put it, it's got to be 10 lower, right? So there we go. It's about right there, okay? So now, again, we have two choices. We can either buy a breakout or short a breakout to the downside, or with these two purple lines, or whatever color that is, looks like purple. What I'm saying now is, once price hits either of these two lines, I will then buy a pullback to the base. In other words, we can let the breakout happen and then buy a pullback to the base or short a rally to the base. Does that make sense? Okay, another way to do it. Yeah, Boyke, I agree that if I was going to trade the Aussie dollar or really any of these markets on such a small time frame, I would definitely do it in the futures, not the spot. As we go to the larger time frames, that's fine, a little bit larger. Okay. So the point of the purple lines is, I don't want to buy a breakout or short a breakdown. I'm not going to get a good price, and I'm probably going to lose money. So, so if prices hit either of these two levels, that's 2 to 1. If prices hit either of these two lines, that's a move of 2 to 1. So I know my initial profit zone is at least 2 to 1. Okay? I will then be interested in buying a pullback to this base. So this is not a supply level yet or a demand level yet. We just let it happen. So that's another thing you can do when you see prices kind of ranging like this, right? Okay. We can look at another market if you like. Oh, we're going to look at gold. I'm sorry. Let's look at gold. Oh, was that pink? Maybe it was pink. Pink, purple. All right, in gold. So again, as many of you know, we're pretty bearish gold. Still bearish gold. Looking to gold to come down to this 1,000 level. So we're pretty far from that. Let's go down to a smaller time frame. Oh, let me get rid of that. There we go. Okay, so this one looks okay. I'm on a daily chart of gold. So we've got a new supply zone that has formed up here. The only downside is this big wick to the upside here, but let me just check it out up here. never mind. I see it now. Okay. So I'll make sure this is a level we can use. So I think we're okay. So we look at this level here. Okay, it's kind of a 10-point. Now we're looking at a daily chart. So this is a pretty big time frame. Daily chart. Yeah. So again, we've just had a breakout to the downside. Prices really just fell. So you don't really want to, again, you don't want to short in that breakout, because when do you know it's a breakout? You're getting a horrible price. Now, if you short it anywhere and just left it alone, you're making money, but that's not realistic trading. You have to have a strategy and plan for managing risk. Not every trade is going to be a winner. So instead of just selling short on that, we can, now we see that there's probably quite a bit of supply up here, and we have a huge, pretty big profit zone opened up. Now we already know there's probably room down to 1,000. So shorting a rally back to the 1270 area is what we'd look to do. Okay. As far as small time frames go, I don't think there's a whole lot to do in gold. Again, I wouldn't with gold. I know we talk about gold quite a bit, and we've been bearish for seems like 2 years now. I wouldn't spend a lot of time short-term trading gold. I would just continue to short rallies into larger time frame levels and hang on to gold for longer-term moves to the downside. That's been our plan. All right, let's keep going. Let's see what the DAX did off that level. Not a whole lot. Well, it's falling again. Yes. Okay. Anybody take this DAX trade? I don't know if there's any mastermind members with us here today. Okay. Next market. YM. Yeah, we can look at YM. YM is going to be pretty much the same as the S&P. Let me get to the other contract here. There we go. Yeah, and YM again, we're prices should come down off that level, but be careful. You've got a little bit of demand here at 1710. Not great, but this demand down here is going to be a problem. 988 to I'd say about 94, right in here. Okay. I'm sure Trader 103, yeah, no problem. Yeah, there's the grid. Here's the supply-demand grid. I had a couple questions about the grid. Yes, we cover 20 of the major markets around the world. Three levels of supply, 3 levels of demand every day. Your first row of supply and first row of demand are for your short-term income trades. Second and third row are for your longer-term wealth trades. But Anyway, with that, I just saw we're out of time. Sorry about that. If you have any questions, there's my email address, sseiden@tradingacademy.com. Hopefully that was helpful, and if you've been struggling with breakout trading, I wanted to at least offer you an alternative today. So, let us know how things go. Okay. All right, have a great day, everybody, and a nice weekend. See you next time.